I've seen some questions come in about bonds as well. So Kevin said, what are your thoughts on VBTLX now, since everyone is saying bonds will not have the returns needed to keep up with inflation? So I guess you could answer Kevin's question specifically, or just kind of talk about the role of bonds in a portfolio or your portfolio, I guess.
Well, so first of all, I'm going to challenge the idea that it's not going to keep up with inflation. We don't know that. We don't know what interest rates are going to do in the future, and we don't know what inflation is going to be in the future. But having said that, bonds serve as ballast in my portfolio. So I don't hold bonds for their return. I'm retired, and my daughter doesn't hold bonds at all because she has the cash flow to invest and take advantage of market dips from her earned income. If you're living on your portfolio, you want bonds as ballast. So you have something else that smooths the ride of stocks. Your income flow for young people working smooths that ride. And in a portfolio where you're living on it, that's the purpose bonds serve. To put that in perspective, a few years ago, I was looking at higher return bonds, which of course have a higher risk. And I was fooling around with those a little bit. And I wrote a post about this back then as well. And I finally went back to VBTLX. There's a post about returning to VBTLX because it occurred to me that if I really want to seek better returns in my portfolio, then bonds themselves are the wrong choice. I had to increase my allocation in stocks because stocks are a much more powerful driver of growth in a portfolio than bonds are in most economic environments. So bonds are not there in my portfolio for their return. They're there for ballast.
Yeah, I would agree with that. Sort of smooths out that ride.
Sorry, Jen. There's actually a follow-up almost perfectly. I'm sorry to talk over you, Jen, but Jim actually said, can you talk about the mechanics of your drawdown strategy?
Yes, I actually saw that question
perfect.
too. Yes.
If you want to put that up while I'm reading it.
Can you talk about the mechanics of your drawdown strategy during these uncertain times? That is, if you have cash in shares, do you cash in VBTLX during these times instead?
So drawdown, my situation is a little bit different because actually I do have cash flow now because the blog is making money in the way it wasn't when I was writing the book, and the book is paying royalties. But if you're drawing on a portfolio and you have a mix of VTSAX and VBTLX or something similar, VBTLX is paying, I think, around 3% interest, and VTSAX is paying a little less than 2%. So let's say you're averaging 2% on the portfolio, maybe a little more. Assuming you're using the 4% guideline as your target for withdrawing, well, the first thing you do is you tell Vanguard or whoever your investment company is that you want your dividends and interest paid into your checking account. And now you've covered 2+% of the 4% you're looking for. And the other 2% or slightly less, you raise by selling shares. And when the market is down and stocks are getting hammered, then you probably want to raise that selling some shares in your bond fund. When the market's rocking and rolling and increasing, then you probably want to sell shares in your VTSAX to raise that 2%. But that's an important thing, by the way, in terms of when people panic and the market's plunging, somehow they get themselves psychologically thinking that, the market's gone down 30%. I've lost 30% because I'm living on my portfolio. Well, no, you're only at the most drawing 2% from your portfolio if you're living on the recommended 4%.
Any thought on dividend stock investment? And since we're talking about selling shares and living off things, this was an interesting question. I just knowing you as I do, maybe I'm going to buckle my seatbelt here.
I'm right along with you, man.
Teed it up for you, JL. Teed it up for you. No,
Did
it's
we only
a
promise
legitimate
football
question.
questions? Just kidding.
A lot of people do have this question though.
Yes.
Yeah, so I'm not a fan of dividend investing. I have a post on this that goes into it in some detail. The problem I have with dividend investing is that dividends are not magic. So dividends are one way. When you own a company, when you own a piece of a company, that company can and should return value to you, and there's a number of ways it can do that. Paying dividends is one of those ways. And typically, the companies that pay dividends tend to be older, more established companies that have high cash flow and relatively low growth prospects. Companies that are younger or just more growth oriented tend to take that capital, those profits, and reinvest in their own business. And that's another way of returning value. I don't mind owning dividend companies. As I mentioned, VTSAX throws off about a 2% dividend, and that comes from the stocks in the index that pays dividends, and that's useful when you're withdrawing. But I also want to own everything. I want to own the companies that are on a faster growth trajectory. I don't want to own one class of company. And I guess that's the main problem I have with dividend investing, is basically you're saying you're owning one kind of company, which tends to be old line, large, established, dividend paying companies. And I wouldn't want to own any one category of the market. I want to own the total stock market.
Right.
And again, we can spend a lot of time in this rabbit hole if you'd like, but I do have a post going into detail for those who care.
Awesome.
And I have a very good search function on my blog. So just type in dividend investing and you'll find it.
And William just followed up saying, important to remember that dividends aren't guaranteed. In recessions, dividends do get cut, and you really shouldn't count on being able to get 2 to 3% returns out of your portfolio without liquidation. So that's added on top of your point, obviously.
Yes.
Yeah,
JL, we've had a bunch of questions about REITs and real estate investing itself. So not home ownership like we talked about before,
Right.
but actual real estate investing, which I think there is.
And there was an expansion to that too, which asked whether or not you have any other holdings other than VBTLX and VTSAX to include REITs or precious metals and other things too. I saw that those questions go by. So
nice. Yeah, no, thank you for clarifying, Jen. That's great. So yeah, I mean, talk to us about REITs and real estate investing as a one thing, and then we'll go into any additional precious metals, things like that, if you even entertain such things.
Okay, so let me start with Jen's question, and we'll sort of work backwards. The only thing I have in our portfolio is VTSAX, and again, about 75%. VBTLX is about 25%. We do have this beach cottage that sometimes is a VRBO, and sometimes, like now, we're using it ourselves. And I have some cash, and that's it. That's all we have. The beauty of that, by the way, when I die, is it's going to be very simple for my heirs to deal with, and that is part of the beauty of the simple path. Is it's simple on lots of different fronts. I used to own REITs, Brad, and in fact, I have a post. I think it's in the stock series called "Stepping Away from REITs," and again, anybody who's interested can use the search function to find it. Basically, the reason I held REITs, and REIT stands for Real Estate Investment Trust, so it allows you to own real estate without any of the hassles of managing it day to day. It's like owning a mutual fund. The reason I owned it was as an inflation hedge, but the more I looked into it, the more I concluded that it wasn't that good an inflation hedge. Certainly was no better than common stocks, no better an inflation hedge than VTSAX. And so because the reason I owned it didn't exist anymore for me, I stepped away from it. Real estate more generally as an investment, and now we're talking about real estate that somebody might actually own and buy, and buying a house to rent out, or an apartment, or a 2-flat, and then managing it themselves, or finding a manager. That's a wonderful way to make money. I used to do it decades ago. I don't anymore because it's too much like work. And I think that's the key thing when you're looking at real estate in comparison to something like VTSAX. Is VTSAX takes none of your time at all.
Right.
Real estate is a hybrid. It's an investment and it's a part-time job, or sometimes for some people it's a full-time job. And so the question you have to ask yourself is that how you want to be spending your time as well as investing your money? If the answer to that is yes, then real estate can be a great investment. You need to take the time to really learn how to do it well, and there are lots of great sources for that. But real estate, absolutely done well, can make you wealthy if you're willing to put in the time in addition to the money. One point in my life, I was willing to do that. Now I'm not.
Yeah.
No,
I
that
like the
makes
simple
perfect
approach. Yeah. I think
I
Brad and I are
actually
both like simple, right?
Yeah, I definitely like simple. And it's funny. I pulled up one of my favorite Warren Buffett quotes, actually, since someone asked about precious metals. So he talks about gold and the lack of utility, and he says you could take all the gold that's ever been mined, and it would fill a cube 67 feet in each direction. For what it's worth at current gold prices, now this was years ago, you could buy not some, but all of the farmland in the United States. Plus, you could buy 10 ExxonMobils, plus have $1 trillion of walking around money. Or you could have a big cube of metal. Which would you take? Which is going to produce more value?
I'm going to throw a monkey wrench. I don't own precious metals, but I've had some people tell me that I should actually consider using metals that are buying small shares of metals that are industrial, like copper. And I think it's sort of an interesting thought, but I have not explored that. I'm a simple person with more asset classes in my portfolio than either of you, but still simple.
No, that's fair. And the simple is fair. And I love that Buffett quote because it's it's based around utility.
Awesome.
And sorry, JL, I talked over you.
No, that's okay. So Jen, going to investing in things like copper. I mean, if the idea behind that, of course, is that industries that use copper are on the upswing, and therefore the demand for copper is going to be on the upswing. And I would say, why not just buy the stocks of those industries? Or better yet, why not just buy the total stock market and know that you own them by default?
Yes.
I love the Buffett quote, Brad. I have heard that before. I haven't heard it in a while, and I love it. The problem with gold in my mind is that you're buying it hoping and expecting that somebody else will be willing to pay more for it at some future date. And so you're just sitting on it. It has no productivity, which of course is what Buffett was talking about. You're not growing anything on it like farmland. You're not owning a business like when you own stocks that is doing something productive that's generating cash and what have you. And I've just never particularly seen the value to it. There is some research that indicates it's not actually a very good inflation hedge, which is one of the reasons that people like to own it. Some people like to own it as an end of civilization strategy that, when all the rest of the economy collapses, but I think you're better if that happens. You're better off owning guns and ammunition and
MREs maybe.
Yeah, MREs, and then you can take the gold away from the people who own the gold.
Oh, you guys are so funny. I love it. But I don't see the utilization of gold. It's not one of the things that attracts me. And
I'm sorry, Jen. Go
no,
ahead.
Please.
No, I interrupted you.
No, please. You're our guest.
I was just going to say I was reading an article by a guy who's a big advocate for gold recently, and this particular person's reasoning is that they're very concerned about the value of the dollar. And we talked about, the national debt that seems to be running out of control. And of course, that will at some point presumably have an impact on the value of the dollar, and gold is an alternative for that. But the implication there is that you're holding a lot of cash, you're holding a lot of dollars. And I agree that holding a lot of cash is a risky thing to do for those reasons. But instead of moving that cash into gold, I prefer to move it into my bond fund or my stock fund, which have the same effect of getting it out of cash, but it's now in something that's actively producing value in a way that gold simply can't do.